Hello traders, how you guys doing today? For the ones that don't know me, my name is Fidel. I'm from California, from the Central Valley to be exact, and I'm a day trader, you guys. And today, you guys, I want to talk about how to become a successful trader. Not only that, but what it takes to separate yourself from the losers to become a winner. Okay, and a lot of that takes a couple characteristics, sometimes some mental strength and some discipline. Okay, but be able to know what you're doing as well. So look, traders, before we get started, okay, make sure you guys subscribe. Make sure you guys become a member at Trade with Fidel on the Facebook. Make sure you follow me on the Instagram, and make sure you guys join that Discord app. There's a lot of information. I always post my watch list. I give everything that you need to become successful. All you gotta do is be able to trade it and be able to trade accordingly and be able to make sense for you. Okay, traders. But look, traders, let's get into it. If you guys have any questions, any comments, please let me know. Okay, so look, what it takes for you guys to become a successful trader, a lot of the things that I'm about to mention right now are very important, and make sure you guys take some notes and make sure you guys put it into practice. Basically, you have to learn it, practice, and after you become successful, you teach it to others. Okay, but basically, number one thing is learn to read the chart. Okay, be able to read the chart, but not only that, be able to understand what the indicators you are using and be able to, how could I say, understand and be able to use the indicators that you're using, be able to make sense in a way that's going to make you profit. It depends on your strategy. It depends how you are planning to trade the stock, but be able to understand, but not only understand, be able to use the indicators that you're using, be able to understand what they do and what they mean. It's very important, like the MAC signal, the blue signal, the divergence, the red candles, the green candle, the doji, the EMA, the RSI. I could keep going and going and going. All basically is to be able to understand what the indicators you are using and be able to basically know what they mean. Because if they pop up, if you don't know what they mean, they could cost you money. You see what I'm saying? Okay, so it's very important. Learn to understand how to read the chart. And I'm talking about the 1 day chart, the 5 day chart, the 1 month, the 3 year. The 1 month, the 3 month, the 6 month, the 1 year, and the 2 year. Be able to make sense of all of it. All right, it's very critical. Okay, I think that's what sorry, I think that's what separates me apart from other traders. Is very good to be able to how to read a chart, be able to identify if the chart is at a good position to make some money, or is at a bad position to lose some money. So I don't trade that at all. So always have patience. Always wait for the right time. So when the chart plays my position or my strategy according to how I want to play it, I do so. Okay. So be able to read the chart, you guys. It's very important how to understand how to read a chart. I have a couple of videos on how to read a chart. I'm going to make a video real soon on the indicators I use, what they mean and what they do, and how do I benefit from these indicators, okay? And some of the indicators, again, is the MAC signal, the blue signal, the divergence, the VWAP, the charts of the 1 day, the 5 day, the 3 day, the 3 month, the 6 month, the 1 year, and the 2 year, and be able to identify when it's a good time to buy and when it's a good time to sell. Be able to use a volume too to find out if the stock is weak, strong, or overcrowded. Okay, so it's very important to understand how to read the chart. It's very important to understand the indicators that you're using and what they mean as well. All right, traders. All right, keep that in mind. Okay. Number two is be able to understand where's the resistance, where's the support, and that is very important, team, because you want to know when you're getting in. You don't want to get too low to the support, because if it breaks support, it's going to continue to drop. You don't want to get too high to the resistance, because if it hits resistance, you're not going to make that much money and it's going to drop. You got to be able to calculate. What I tell my members is my trainees is that you got to be able to get about 30% above the support and 70% below the resistance. That's the perfect indicator for you to get in, and not too low but not too high, and be able to ride up to the resistance to sell the resistance, or be able to sell at a squeeze above the resistance, or breaking that level of resistance to a new high. Okay, members, to be able to identify where's the support, where's the resistance. What I tell my members, sometimes you have to go back 3 months, 6 months, a year, or 2 years, or even more, to compare the chart to what it is now to what it was then. Because you know what? The market is being run by humans, and us, majority, a lot of the traders, 90% of them, matter of fact, they trade emotionally. So a lot of the stocks is being run based on emotion. So history always repeats itself. So don't ever forget that. Okay. Number three, you guys be able to be disciplined. Discipline is very important. Be able to say no to drugs. Just kidding. No, I mean it. But be able to say no to stocks, especially if you're in a stock and it's going bad. You'll be able to say, you know what, this is it. I have lost so much. This is where I'm cutting my losses, and get out of that trade. Not only that, what I see a lot of amateurs, especially beginners, doing a lot is that they see a stock that's going very well, it's going super normal, but they're out of day trades, and they get into the stock, but they can't get out. And they get into a stock, then the stock does very well, and if they get lucky, they'll be able to walk out the next day with profit. But if it doesn't play as good, that stock starts going down, and it becomes the worst nightmare, that they were not able to get out that day, and it's going down, and they're able to get out the next day, right with the bell rings, at a negative 15, 20, 30, 40, etc. You know what I'm saying? So basically, team, don't force a trade if it's going to cost you money. Don't get into a stock knowing that you're not going to be able to get out. That is very critical. I see a lot of amateurs doing that. Be very disciplined. Another thing of what I'm going to talk about, discipline, if you're up on profit, if you just traded a stock and you made, let's say, 6, 7, 8% or even more profit, that should be enough for the day to be able to turn off your device, wherever you're using to day trade, and move on with your day. Take that 10% or wherever percentage it was, take that home, and tomorrow's another day. Okay, because I've seen a lot of amateurs, especially I have done it myself in the past, that I'm up, for example, $400, and I tell myself, or tell the team, let's see what I could do so I could make another $100 real quick. Take that $500 home and call it a day. And guess what, team? I force a trade somewhere in between, then I end up losing 50, 60, or maybe $100 more. Then instead of me taking that $400, I end up taking, let's say, 320, 300, 350. You see what I'm saying? So always be disciplined, be able to take the money home, basically, especially when you're up in profit, team. If you're up in profit, like I said, 5, 6, 10, 20, 30% profit, lock it in, take it home, forget about it. Don't be impatient. Don't feel like you have to make another trade. It doesn't play out like that, team. Don't force a trade again. If you think like that is being emotionally, and emotionally it's gonna cost you money, okay, team? So be able to say no to trades. Be able to say yes to the right ones. Basically, be able to be disciplined. All right, team. Now the other one is always have a plan. One of the things that I tell my members a lot that's very important is be able to have a plan, because if you fail to plan, you are planning to fail. Again, if you fail to plan, you are planning to fail. So make sure you have a plan, okay? Make sure you know what price you're going to get in and what price you're going to get out. And one of the most important things is to be able to stick to your plan, because one of the things that I lack on myself is that I'm up on profit, and my plan is to take 10% profit, and I end up taking 7%, 8%, because I got a little bit impatient, because I see the stock struggling a little bit. Then before you know it, I end up selling a couple minutes later, a couple hours later, it hits my price or surpasses my price of the percentage gain that I was trying to take home. So you see what I'm saying? And it happens a lot, team. So Stick to your plan. If you don't have a plan, team, you are just gambling. Okay. If you don't have a plan, you are a loser. You don't know what the fuck you're doing. So excuse me for my language, but be able to have a plan. Okay. Again, if you fail to plan, you're planning to fail. Oh, it sounds like they're stealing my car out there, but nah, that's not my car. But yes, okay, team. So always have a plan. Stick to your plan. Okay, don't get impatient. At first, maybe your plans are not gonna play out according to how you plan, but that's plan. That's the part of planning, because as you keep planning, you're gonna keep strategizing, analyzing, and become a better planner. You're gonna become a big, successful trader. But make sure you plan, because you know what, the Bears and the Bulls, they always plan, except for the pigs, and the pigs get slaughtered. Don't become a pig. Okay. Last but not least is make sure you are a logical trader. Sorry, I hit my dog down here. My dog is right here, laying right next to me. Make sure you become a logical trader, team. It will separate you. It's, especially if you learn how to master it and be able to be very disciplined, be able to say no to the right, to the wrong ones, and be able to say yes to the right ones. It will separate you. It will separate you from the masses. It will separate you from the 90% of traders. You see my office, okay? When I come into my office, my door is right there. When I come into my office, I leave all emotions behind. I make sure I'm clear headed. I make sure I have a plan on what I'm doing and what I'm about to trade that day. And I stick to my plan. If I'm sick or if I don't feel well or something's going on in my family and my conscience is not right, I don't trade. I let the members know that I'm not trading that day. I set up opportunities for them, and a lot of them do know what they're doing. So I just set up the opportunities and they make things happen. But I don't trade, team. Okay, because you gotta be logical. You gotta be very disciplined. You gotta be able to have the trading mindset, and the trading mindset basically has a lot to do with be able to read the chart, be able to read the indicators, be able to be disciplined, and be able to be logical, and that will separate you from the 90% of the traders. Okay, so hopefully this video helped you guys out a little bit. Okay, make sure you guys leave me some comments if you guys have any questions. Again, it's very important for you guys to subscribe so you guys can learn from me more. Make sure you guys join the Discord app, the Facebook. Make sure you guys are a member. On the Discord app, I give a lot of information for you guys, especially pre-market. I give you guys a watch list. I give you guys a lot of information to try to help you guys out. Besides that, a lot of members that get trained by me are in my group. Besides that, I have a lot of traders that are pretty experienced, are pretty successful themselves, because you know what they say, success attracts success. So right, traders, make sure you guys become members, make sure you guys subscribe, and make sure you guys give it a thumbs up. All right, I appreciate that, and be ready for the next video. All right, traders, you guys have a good day. Bye bye.